Kolonji Murray with TaxAssurances. Just want to do a quick video about business entities. And what I mean by that is when someone sets up to go into business, they need to choose the type of entity that they're going to use. And there are a couple of different options. The first one and the most popular one, just because of the cost, is the sole proprietorship. A lot of times people will just use their name and a social security number, or sometimes they'll even get a separate tax ID, and they're pretty much up and running for a few $100s. The other option is a LLC. So people who are going to spend a little bit more money when they set up the LLC, they'll use probably an attorney or an online service to get that set up. And once that's up and running, they'll be able to start operating the business. Now, very similar to the sole proprietorship, an LLC, when it comes time to do taxes, they'll file what's called a Schedule C. And that Schedule C simply means that it's going to be part of their personal tax return on the 1040. And it's just an addition to their 1040 return. The next option for a number of business owners to choose from is the S Corp. So S Corps are a different type of corporation, but the information flows right through to their personal return in what's called the K1. And the K1 is generated from what's called the 1120S. And the 1120S is simply anything that happens with the business for the entire year. So all of the revenue, all of the expenses that happen, that's going to be captured on the 1120S. It's going to be summarized, and then all of that information is going to be allocated to the different business owners, and that's again what I'm referring to as the K1. That K1 information is then transferred to what's called the 1040 tax return. Obviously, most people know about the partnership. At the end of the year, someone's going to be able to file a tax return for those partners. They're going to use what's called a 1065, and that 1065 is, again, just a summary of what happened with the partnership for the year. They're also going to have a summary of what went to each individual partner at the end of the year. And then finally, there is the C Corporation. The C Corporation is another type of entity. That entity is going to not flow through to the personal return. It's going to have its own tax liability that the owners of that C Corp are going to have to be responsible for. So again, those are the types of entities that are set up. If you have questions that you want to go over about those, just give me a call.